You know, when we think about the AI revolution, our minds usually jump to chip designers or flashy software companies. But today, we're going to pull back the curtain on the real engine behind it all. We're talking about a power company that might just be the single smartest AI investment you have never heard of. Let's dive in.
It all kicks off with this one. Absolutely massive number, 945 terawatt hours. That's how much electricity data centers around the world are expected to need by 2030. Now, to wrap your head around that, that's enough juice to power every single home in the United States for a full year. AI's thirst for power isn't just big, it's completely off the charts. And that, my friends, raises the multi-trillion-dollar question. I mean, seriously, where is it all going to come from? This isn't just some engineering puzzle, it's a colossal investment opportunity. And finding the company with the right answer, well, that's the key to our entire story today.
So here's how we're going to break it all down. First, we'll get a handle on AI's incredible power needs. Then I'll introduce you to Vistra and show you its unique position. After that, we'll check the books, wrestle with that tricky valuation question, and finally, I'll give you our final verdict.
Okay, first things first. Before we can even begin to talk about a single stock, we have to understand the seismic shift that AI is causing in our power grids. We need to grasp the sheer scale of this energy tsunami that's heading our way.
Just look at this chart. We're not talking about a gentle upward curve here. This is a rocket launch. We're going from 415 terawatt hours to 945. That's a 15% compound annual growth rate. In the utility world, a pace like that is completely unheard of, and it's exactly what makes this such a compelling story for investors. And here's the thing, this demand isn't spread out evenly. Nope, it's hyper-concentrated. Just two grids, PJM in the Mid-Atlantic and ERCOT in Texas, are the absolute epicenters. Together, they account for over 60% of all data centers in the US. Now, you're going to want to remember those two names, PJM and ERCOT. They are the key to this whole thing.
So who on earth is going to feed this beast? Well, that brings us to the hero of our story, Vistra Corp. Let's take a look at why they are so perfectly positioned to become the power behind the AI throne.
Vistra is, without a doubt, a power generation giant, but their real superpower is their portfolio mix. They are not a one-trick pony. See, this specific blend of natural gas, nuclear, and renewables gives them exactly the kind of flexibility, and this is the important part, the reliability that AI data centers absolutely have to have.
And here it is. This is the aha moment. Take a look. In one column, you've got the two hottest data center markets in the entire country, PJM and ERCOT. And in the other, you see Vistra's massive power generation footprint. It's not a coincidence. They've built their power plants, almost 42 gigawatts of them, exactly where AI needs that power the most. It is a perfect geographic match.
So it's pretty clear Vistra is in the right place at the right time. But here's the real question. What makes them the best choice to actually win this race? Let's break down their unique strategic advantages, because this is where it gets really interesting. You see, AI data centers can't afford blackouts. They need what's called firm power, electricity that is on 24/7 no matter what. Vistra's nuclear fleet provides that constant zero-carbon power, which is a huge plus for tech companies trying to hit their environmental goals. And then, their natural gas plants provide reliable power that can be ramped up at a moment's notice. It's the perfect one-two punch.
And then there's this, the financial game changer. Vistra just recently earned an investment-grade credit rating. This is basically a golden ticket from Wall Street. It's a stamp of approval that says this company is a safe bet. And what that does is it unlocks cheaper capital, giving Vistra the low-cost fuel it needs to build all the new power plants that are going to be required.
Okay, the story is incredibly compelling, right? But does the math actually add up? It's time to pop the hood and take a really hard look at Vistra's financial engine to see what it's made of.
Let me tell you, Vistra is an absolute cash-generating machine. They are projecting $3.3 billion in free cash flow for 2025. That is an enormous war chest they can use to fund new projects, pay down debt, and of course, reward their shareholders. The financial foundation here is just rock solid.
Now, I know what you're thinking. Some investors might look at their debt and get a little nervous, but you gotta think of it like this. If you have a big mortgage, but you also have a really high, super stable income, the bank isn't worried about you, right? That's Vistra. Their cash flows are so predictable and so strong that their debt is considered totally manageable.
So this all sounds almost too good to be true, and that's exactly what the market has been thinking too. Vistra stock has been on an absolute tear lately. So that leads us to the million-dollar question.
have we already missed the boat on this one?
You know, it's the classic investor's dilemma, isn't it? When a stock has this kind of momentum and the story seems this perfect, it's really easy to feel like you're late to the party. So let's dig in and see if that's actually the case here.
Okay, at first glance, this chart is, well, it's terrifying. Vistra's price-to-earnings ratio, or PE, is at a sky-high 62. That is more than double its peers and nearly 4 times the industry average. Honestly, if you stopped your analysis right here, you'd probably run for the hills.
But here's the twist. That 62 PE ratio, that's like driving by looking in the rearview mirror. It's based on past earnings. The market is forward-looking. The forward PE, which is based on what analysts expect Vistra to earn next year, tells a completely different story. It drops all the way down to a much more reasonable 26.5. This suggests that today's price, well, it could actually be a bargain in disguise.
All right, we have examined the trend, we've analyzed the strategy, we've crunched the numbers, and we have weighed the risks. It is time for the moment of truth. Let's get to the final verdict. Based on our comprehensive analysis of all the sources and all the data we've looked at today, our recommendation for Vistra Corp is a resounding buy. So here's the bottom line, all laid out on one slide. We're calling this a buy, with a 5-year price target of $375. The core argument is just so simple. They have the right assets in exactly the right places at exactly the right time. Now what's the biggest risk? Execution. They have to actually build out the new capacity and lock in those lucrative contracts. If they can do that, the sky's the limit. And it sounds like that execution risk is being handled pretty well. The CEO himself, Jim Burke, is on the record saying they are seeing record levels of interest. Look, that's not just some corporate fluff. That is a crystal clear signal that real, paying customers are knocking down their door. Vistra is in the driver's seat. So, as we stand here at the dawn of this new AI age, maybe the ultimate gold rush isn't about finding the next great algorithm or the fastest chip. Maybe the safest bet of all is on the companies providing the raw power that brings it all to life. Thanks for joining us for this explainer, and don't forget to subscribe for more deep dives into the companies shaping our future.